Email us your money at skynews.com.au. Julia, plenty of red out there at the moment. Gold in particular coming under the pump.
We did see gold continue to come under pressure during the Asian session. In fact, in New York last night, we saw gold prices dropping below 1,400 US an ounce. And unfortunately, during Asian trade, we've seen gold prices remain below 1,400. So that's had a big impact in terms of gold miners on our market. In fact, the gold sector losing 5.3% on the market today. And if we have a look at the 40 stocks that make up that sector, only 2 managed to finish in the black today. There were some pretty steep losses. We saw Evolution Mining as well as Kingsrose, and Kingsrose down by more than 10%. And if we have a look at gold prices, well, they have been under pressure for a while. Gold prices, these are the New York prices over the last 2 years. This is what the chart looks like. But there's been plenty of warning signs as well. We saw the 200-day moving average being broken on the downside at the end of last year. We also saw the death cross for gold prices on the 22nd of February. And of course, since then, we've just seen the losses really accelerating there. So a lot of pain for the gold miners, a lot of pain in that material space. I guess one area which stood out on a positive note is that we did see copper players being supported. We actually saw Oz Minerals up as well as Sandfire closing up higher. And that was on a day where we did see quite a steep sell down in most of the material stocks.
Julia, just on gold, do you think it's overdone, or do you think there's further pain ahead?
I think if we have a look at what's helped to support gold prices over the last few years, a lot of it's been around quantitative easing out of the US. In fact, if we have a look at the steepest gains that we've seen over gold prices, it's been through QE1, QE2, and I guess now that speculation is that quantitative easing could be pulled back. We are seeing gold traders looking towards the future and pulling back on some of their bullish positions on gold. Also, it looks like inflation really not a problem in most of the world. In fact, it looks like the opposite is true, that we're facing disinflation and possibly even deflation. So traders just really repositioning their macro views of the world, and with the US starting to look a bit healthier and talk of the pulling back of quantitative easing, I think that's having a negative impact in terms of the macro picture for gold prices. And of course, that strength of the US dollar certainly not helping commodity prices, because most commodities traded in US dollar terms, and as the US dollar rises, unfortunately that tends to be a negative for commodity prices.
Oz Minerals ties in nicely to one of the other features today, a bit of MSCI rebalancing.
I guess one of the popular trades out there is to try and guess what's going to happen out of this rebalancing and try to front run it. And we see that when we see the S&P rebalancing, and certainly that was quite obvious with the MSCI rebalancing today. And one of the stocks that we saw a big reaction in from today is REArealestate.com. Now, this is a stock that's down 7.5% with no news, but it was one of the stocks which a lot of traders had picked could possibly be added to the MSCI Australia Index, which includes about 200 stocks. And of course, when we saw the announcement today, the only addition to this index was SEEK. So SEEK doing very well today. It was up by 8.7%, but the stock that a lot of traders had picked to go into this index had been REA. And if we have a look at the stock there, down by 7.5%. So we saw exactly what a difference, trying to guess and trying to trade the rebalancing can make. The two stocks that were deleted were Oz Minerals was actually down around about 4% during the session before seeing some support come in the afternoon to finish up by 1.2%. But initially we did see a sharp sell-off there, and the other ones is Sims Group, where we did see a decline of almost 7% in the shares there. So we did see some traders trying to front run these results, and of course these results are important because a lot of fund managers use them for benchmarking, as well as exchange traded funds replicating the index. So often when we do see stocks being added to the index, that results in some buying of the stock, and that's usually positive for the share price. And of course, deletions, the opposite is true. We see some forced selling of the particular stock, so it tends to be bad news for share price.